I'm going to give you 4 quick technical reasons as to why Bitcoin may actually be due a further sell-off to the downside in the near term. Reason number 1, I'm going to take you back to the previous continuation pattern that was a broadening, descending continuation pattern. I've highlighted it here in the green for you. And I want to highlight that it was quite extensive. It was from March. There's the high from March all the way until the breakout actually occurred some point in the end of October. So it was an extended continuation pattern. It is a descending broadening structure. This is our own methodology that we've brought sense to technical analysis for determining these things. They're not triangles. We read from left to right with charting. You start and you finish with the most recent data. You don't read it the other way. It's a broadening structure and it is a descending one that implied upside continuation. The break occurred over here. The return moves. There was a test and break, then there was a proper break, there was a return move, and then you had your best part of the move over here. Very fast, quick movement. That was the Trump trade. Hey, crypto, everything. I'm going to be bringing you your digital prison system. Let's all cheer about our bags being pumped on that story. So what actually happened? 100% is the fib. The low, that was the yen carry trade low, which was when we called the top at 70 perfectly there and said you could have a pullback. We didn't think it would be that meaningful. And of course, the yen trade dynamic came in. Bitcoin puked all the way down and actually traded below the 49K mark. So that was, my apologies, below the 50K mark, traded at 49,698. So that was quite a substantial 70K to 49K, an over $20,000 spiller, an absolute thriller. And it was all the way from Manila. Okay, 0% is the bottom of your fib. So you do the highest point, 100%, and you pull through the bottom and you look at the Fibonacci extension. This is reason number 1 technical. Those of you that are familiar with Fibonacci patterns will know that the golden mean, done in blue, whilst we did the gold in 150 over there, the golden mean is in fact 161.8. It is quite typically a good resting point. In other words, you have done one full move and then you've done 61.8% of the overall scale. So the scale from here down to here, this represented a 61.8% extension. So the total move is a 1.618 extension. You often get rests during this period. And what you can actually see is that this has been a key level. Of course, you ran through it, you pulled back hard. There was some late momentum and you did some grinding there. You then got slammed back to that level kind of hard. We'll be doing more analysis on the lower time frames on that particular area. But it's quite plausible that after a meaningful run of the $94,215, that will vary, of course, by exchange slightly, but once you'd run the 95, with the key level being the 100, which did fall, and some pushes through that once that had happened, you may pause for an extended period and have pullbacks after running the golden mean Fibonacci extension on what was, don't forget, almost the entire year's continuation pattern. That was a very frustrating time for crypto bulls. That hit the high in March at around 73,794, and you didn't take it until quite a lot later in November. That is the beating of the March high. Even though we called the breakout before that, there with the return move there, which allowed you to get in sooner, you only really took the March high in the first weeks of November, which coincided with the forthcoming election outcome. Okay, that's reason number 1. What's reason number 2? Technical reason number 2 that we're going to give you is this one. We just showed you a bull pole that was the 25K to 73K run with a descending broadening structure. Now we're showing you on a shorter time frame. That was, of course, daily, the larger daily time frame. We've now dropped to a smaller time frame and we've expanded it a little bit. And we're showing you the final move up into that 94 level, which was the Fib 161. It's not there anymore. And that actually you had a bull pole, but since then you've been grinding higher and making a broadening structure again. Only this one is one that's attempting to ascend. It's attempting to ascend. What it represents is a decrease in the price appreciation momentum from the previous pole that you saw here as labeled by us, really strong and dominant up, to a far slower grinding up. There were already a couple of grind lines that have surrendered in this process for Bitcoin, running along the lows there as well. You broke that over there. It's also the splitter of the broadening structure that we've already done, and you are now sitting on that basing ascending grind line, basing along the bottom, ascending going up grind line, and that is your capping ascending grind line that's captivated the 3 localized high, ending in the final high, which is actually a bit of a localized high for us. Likely to indicate that you're going to have a pullback and a rest pause, and it's going to be a little longer than people expect before you are surpassing that 108,000. Okay, that is technical reason number 2. An ascending broadening structure on a bull pole is actually exhaustive, and we are expecting the basing ascending grind line to be potentially broken. Let's get on to ascending to reason number 3. Technical reason number 3. I'm going to take you into the shorter time frame one, the shortest of them all, to start with before pivoting back to number 4. What you have is quite a reasonable sell-off. We're still on the 12-hour here. You have quite a reasonable sell-off that has set up a pole. And the price behavior since that has attempted to rally off of this 93,000. More on that in a moment. And again back up there, attempting to rally back up to the splitter, fail, and then very low volatility fractalization here, again along the basing ascending grind line of what is a bear flag. So there is a flag over here with a splitter. That is your reason number 3. Bear flags do in fact give you a target, and the target for the bear flag is indicating an 83,000, which would retrace all the grinding price behavior. Roughly here at the 85, 86, you were still going up strongly, and from here you were going up at a more grinding manner, which was also indicating too much buying coming under the bottom, but not making significantly higher highs each time. So bear flag is the reason number 3 as to why Bitcoin may go into the new year or even this Christmas New Year period in between to the downside. The 4th and final reason technically why you may get a downside is kind of an interesting one, and I'm still staying on the 12-hour time frame for you, is that this entire structure has set up what is known as head and shoulders. Complex head and shoulders by our book. You can learn how we do that in our own program by booking a call. You can also find out more by just grabbing the free mini series. Costs you absolutely nothing. You get a video delivered to you every day. In this video, you will learn a couple of the key points of what I'm illustrating now in this video. 93K is our neckline for that head and shoulder. It has been run here. We call that the left armpit by our lexicon, and the right armpit was met with real violence. So you're also seeing the momentum switches changing. The down legs started to become more prominent here, and ever more prominent till we got the peak of the head, the localized high that we are calling for longer than people expect, before it gets run right the way down to the 93,000 that was just run before it bounced. And again, you can see in the light gray the flag we just gave you in point number 3. This particular target projects down to 79,868, which could suggest a loss of Bitcoin value below the 80,000 mark on a head and shoulder structure, which has as a right shoulder a bear flag, which overall represents a bull pole in a broadening structure, which was technical point number 2, and which is all occurring roughly, the 93 neckline is very close to the 94,000, 1.1 my apologies, 1.618% Fibonacci extension on the 7-month, is it 7-month, March to November? It's going on 8, almost 9-month continuation pattern from its high to its low. In short, we've made the golden mean at these levels for this price move, which is typical to see price gestation for a while. Yes, you overrun targets typically, then you can have pullbacks and you can churn and slip a little bit down before eventually making new highs. In short, 4 key reasons technically why Bitcoin may sell off. This will also likely have underlying knock-on effects on the alt markets too. Okay, hope you've enjoyed this video. We aim to keep it short. I want to say Merry Christmas to all of you on the Crypto Sniper channel. Thank you for your follows. Thank you for taking us through the 50,000 marks. Remember to resubscribe. You are being unsubscribed. We get countless people in the comments saying they're not getting notified. Grab the free mini-series link. It costs you absolutely nothing. Get a short video, 5-minute, 6 minutes each day for a week. And don't forget, if you feel you want this level of insight and being able to call something that's maybe not that popular, you can do it too. It's a totally transferable skill. And to do that, you click on the book a call link so that you can find out more about our products and offerings. A multitude of products at different levels, which also allow for payment plans. I want to wish you all a massive new year. Enjoy the celebrations. You don't have to get mindlessly drunk to have fun. Just enjoy good family, good friends. Stay safe, and we'll see you in the new year. Thank you for liking and sharing. Until next time, catch you later.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.